Hey guys, Stefan here again. So today I'm just gonna basically give a rebuttal of a particular article called The Blockchain Pipe Dream, and it's by Nouriel Roubini and Preston Byrne. So let me just turn screen share on. So Nouriel Roubini, he's sort of a well-known no-coiner, and Preston, I think he's actually a libertarian, but I think he's also misguided on what Bitcoin is. So what I'll do is I'll first step through the article and just kind of give a dispassionate summary of it, if you will. So they're basically saying, even after a sharp correction earlier this year, the price of Bitcoin and other cryptocurrencies has remained unsustainably high, and techno-libertarians have continued to insist that blockchain technologies will revolutionize the way business is done. In fact, blockchain might just be the most overhyped technology of all time. So they're going through this here, talking about how, okay, it's been overhyped, a lot of the initial coin offerings have failed, that many of the 1500 plus cryptocurrencies will fail, but that blockchain will revolutionize finance and human interactions, etc. So then they're saying, well, actually, we think blockchain is very overhyped. So they're saying, actually, what you're doing is just running one instance of a software application replicated over many other devices. They're saying the required storage space is very high. They're saying that some of these technologies are very centralized, or they take a lot of work, and that they consume a lot of energy, such as the Bitcoin mining. They talk here about how they think it can make sense in some cases where the trade-off is worth it, but that's not how the technology is marketed. They talk about some of the schemes that are marketed on. So one example is this world computer concept. Another concept here that they're talking about here is the concept of replacing certain protocols, and that blockchain can become a new protocol that everybody uses. And then here they're talking about some of the inefficiencies of various technologies in this space, talking about the fallacy or the absurdity of recording all the world's transactions in a single database. In this paragraph, they're just basically talking about how they don't believe that blockchain will unseat other protocols. They're saying here they're saying that blockchain is this utopian thing. Here they're making an argument about the need that there still will be a need for intermediaries. Here they're saying, okay, let's end the hype. We don't need this. There are some centralized applications that are better than Bitcoin. That this is ultimately just a big railway mania, and ultimately it will be very limited in use, and many of them will go bust. So that's sort of just a quick summary of the article. Obviously I'll post the link. At a high level, the summary here is these guys are looking at this like it's a technology and not at the money. There are points where I would agree with them that blockchain technology is overhyped. What we really need to focus on is Bitcoin. And the problem, the error that Nouriel and Preston are committing here is that they are basically tarring everything with the same brush. Bitcoin is not like the others. It's Bitcoin, the sound money, versus everything else, which is a shitcoin. And then on the ICO side, in the initial coin offering side, at the best case, some of these are just questionable investments. And in the worst case, they're just outright scams and people trying to get rich. So you've got to distinguish between where the real value in this space is, which is Bitcoin, versus the everything else, basically. Most of these other things are sort of like a cargo cult. They're trying to market themselves as having the same cool things or even better than Bitcoin. Therefore, buy us because you might get a big gain similar to what Bitcoin is going to go through with its hyper-Bitcoinization. But that's not the case. And in order to understand that, you've got to bring it back to why do we have Bitcoin in the first place. So with that said, let's now just step through the article paragraph by paragraph just to offer a quick response on each of them. So they're basically talking about, they're saying, when some people predict that Bitcoin and other cryptocurrencies will fail, they'll say, well, okay, but the underlying blockchain technology will be good. I actually, in some ways, talk about how blockchain, in some ways we agree, right? I think blockchain technology is overhyped, but distinguish between blockchain technology and Bitcoin, which is sound money. So I would agree with them that basically every single one of these currencies will fail except for Bitcoin. So in some ways I actually agree with them on certain points. It's just that what they're doing is tarring everything with the same brush and not realizing why Bitcoin is distinct and Bitcoin is better. So in this paragraph, they're talking about how blockchains are very overhyped, and I would agree. Actually, blockchains are less efficient than existing database technology. It does not make sense for everybody to store every transaction or every single record. What might make more sense from an efficiency point of view is to centralize and to have a permission system rather than Bitcoin's open, sort of permissionless system. However, there's a specific reason why this blockchain and that kind of quote-unquote inefficient system is used. It's there so that you don't have to trust. It's there because this thing needs to be censorship resistant. Why? Because we're trying to make a censorship resistant money. That's why Bitcoin is different. That's why Bitcoin has to run on a blockchain. But that's also, conversely, that's also why many of these other technologies don't actually need to be run on a blockchain. They're just doing cargo cult science. They're thinking, oh, well, if I recreate some of the components, I'll be able to successfully market myself as the whole thing. When really, they're just recreating one piece of that puzzle and not seeing the overarching reason for why Bitcoin needs to be censorship resistant. And the reason for that is because we need a sound money. We need a money that can't be centrally inflated or so easily controlled. So moving on. So they're talking here about how it's actually much more difficult to run blockchains because rightfully so. You've got to store everything. The computational power is much higher. The latency is higher. Agreed. It's just that, as we were pointing out before, Bitcoin is different. There is a specific reason why they went this pathway. So here they're talking about proof of stake, and some of this is concepts that are used in some coins, and they're trying to merge this into Ethereum at the moment. But that's not actually in Bitcoin at the moment. Now, blockchains that use proof of work, yes, that's an example. Bitcoin is one example that uses a proof of work system. And that can seem wasteful to an outsider. However, there's a purpose for that. It's there so that it proves to everybody else that it must have been difficult to do this, and by this I mean create that new block. And for every new block, it becomes harder and harder to rewrite further back into history in terms of what the transaction log or the blockchain ledger, what was the history of that. So think of that like it needs to be there to allow people to have trust in the system, to trust that this is a secure system because of the need for proof of work. That's why Bitcoin mining does use a reasonable amount of energy. But the argument here is that worth it for sound money? And we would say yes, it is. That kind of energy use is worth it for sound money. The boon, the productive gain to the world of having sound money will be worth it. That's the argument. So they're saying here, yes, it can make sense in certain cases where the speed and verifiability trade-off is worth it, but this is really how the technology is marketed. Now that's their words. So look, they're talking here about how some blockchain proponents make wild promises to overthrow entire industries, and I would agree with them on this point. It is oversold by a lot of these hucksters and charlatans and scammers, basically. Well, hucksters and scammers in the worst possible case. In the best case, it's just misguided people who think that blockchain will improve things. Another point here they're talking about here is this concept of the blockchain as a distributed universal world computer. Now that point specifically applies to Ethereum and some of the other kind of Ethereum copy coins like Neo and whatever else. Bitcoin is not trying to be the world computer. Bitcoin is trying to be sound money. It does not require a world computer, and in fact, this need for a Turing complete system, it would actually be a weakness if applied to Bitcoin. And that's why the Bitcoin developers didn't go down that pathway. Because think of it like this, it's like there's a Unix philosophy which is sort of like do one thing and do that one thing well. That's what Bitcoin is trying to do. It's trying to do money and just that. It's not trying to do this amazing, fantastic Turing complete world computer. That's something else, and that introduces a lot more security risk. So Bitcoin takes a conservative development path, and that in turn is what enables people to trust their value into Bitcoin as opposed to Ethereum. That's one of the reasons, at least. So some of these points, well, yeah, I agree with them. I actually agree that, Ethereum is crap. It's not that, it's not going to become sound money. Or even in the best case, the addressable market for Ethereum is nowhere near the level of the addressable market for Bitcoin. With Bitcoin, we're talking about global wealth. We're talking roughly 280 trillion US dollars in today's terms. Here they're talking about, okay, well, we think blockchain, these blockchain people argue that it's going to become a new universal protocol, just like TCP/IP or HTML. So here I would disagree. Here I think it's more like Bitcoin can become like a universal protocol for money, but money specifically. All the other coins and ICOs and Ethereum and that, not so much. It might be possible, but again, like I was saying before, I would be very skeptical. And even if they do work out, even if they do successfully pan out, the addressable market for Bitcoin is just so much bigger that really I think of Bitcoin as the best investment, because this Bitcoin is the most scarce. So yeah, moving on. So this stateful concept, again, that's applying here. So they're saying blockchains are stateful, meaning they store every valid communication. Again, I think that's a concept that applies more to the Ethereum component. And just this comment here where they're talking about, okay, Bitcoin is limited to 5 to 7 transactions per second compared to Visa, which does 25,000 transactions per second. Now here you have to compare, why is Bitcoin valuable? So remember, there's a distinction between Bitcoin, the payment network, and Bitcoin, the token. What we're talking about here is Bitcoin, the token, being the best sound money for the world. Bitcoin, the payment network, it's sort of orthogonal. Yes, it helps. And yes, it's like having some form of ability to send across the world cheaply and quickly is important, but not every transaction must go on directly onto the Bitcoin blockchain. So one example here is the Lightning Network. So you can see here, Lightning Network is like a layer 2 that is above Bitcoin. So you can read into it if you look up the Lightning Network, and there's various talks on YouTube. But the gist of it is, think of it like you open a payment channel with somebody, and rather than having every transaction between you and that person hit the underlying blockchain ledger, we would have like a tab, and we would just settle up at the end. But then the other cool thing is, it's not just a channel between me and you, say, it allows multi-hop. So it might go from me to you to somebody else, all in the one channel. Well, all through my one channel, let's say. So that's one example. And let's not forget, we're not reliant on Lightning Network to work for Bitcoin Core to really work, for Bitcoin to just take off anyway. Reason being, number one, there are other possible layer 2 solutions that will come above Bitcoin. And number two, not every transaction has to be done in that cryptographically proven way. We might have a future where retail banks perform that role for us, and Bitcoin's base layer is like the settlement layer amongst the amongst the retail banks. So that's why this 5 to 7 transactions per second thing is not that important. Now, obviously, yes, it would be nice if Lightning Network pans out, and from what I've seen so far, it is looking quite promising. And the promise of it is essentially that it would allow millions to billions of transactions per second across the network. So if it pans out, that's what's possible, theoretically. So here they're just making a couple comments around blockchain scaling and the centralized database components. Again, we've sort of spoken to those. Here they make a comment about how they think blockchain will not unseat TCP/IP, and that some of these other coins or projects such as Tezos or Ethereum could set a standard. But again, we've spoken about how some of these Tezos and Ethereum and all these other ones are basically just cargo culting on what Bitcoin is. So when it comes to this comment where they're saying, okay, but betting on a particular coin, as many investors currently are, is not the same thing as betting on adoption of a larger protocol. Well, again, as I was pointing out before, you have to understand Bitcoin is different. Bitcoin is better than the others. It came out first. It has the best network effects. It's got the best developers, the most investors, the most exchanges that take it. It is different. it is the one that has the best chance of becoming the global money and becoming the protocol, the money protocol, let's call it, compared to all the others. So, yeah, and just on this comment, so they're saying, given what we know, it's unlikely that all the benefits will capitalize into only one or a few coins. Actually, I do think it will capitalize mostly into one or a few coins. Reason being, opportunity cost. For every Australian dollar I hold, there's an opportunity cost there for me to not hold US dollars. And so too, with every Litecoin or Ethereum or whatever else I could hold, if I don't hold that, well, I could have held more Bitcoin. There's a strong opportunity cost. And if you understand the reasons or the origins of money, it's that money is the most saleable good or commodity out there in the market. And because Bitcoin has the strongest monetary characteristics, it is the most saleable. And so what we're going to see is more and more people coalescing around Bitcoin as the one store of value for the world. So this is where I would disagree with them, and actually I think this is really more like a winner takes most, or maybe even a winner takes all market. That's why the belief of a Bitcoin maximalist is that Bitcoin will someday come to be 80%, say, or even up to 100% of global wealth storage. So just like in the same way you've got power laws that often mean that 80% of the results are generated by 20% of the inputs, in a similar way, Bitcoin will be that 80%. That's the theory, anyway. So another point here is they're saying, okay, well, a third false claim is that there's going to be this trustless utopia that blockchain will supposedly create by eliminating the need for financial or other reliable intermediaries. Now, again, here, I might somewhat agree with them, because actually, Bitcoin won't necessarily remove every single bank. I think there will be a future where banks will have to evolve, they will change. The banks that exist today are not necessarily the banks that will exist in 20, 30 years' time, but those banks that do evolve and provide good services for their customers in terms of storing their coins, offering them good, secure, say, multi-signature and whatever else technologies that come. It could be privacy, could be security. It's not necessarily that, the world won't have banks. What we're talking about here is Bitcoin eliminating or sort of massively eroding the role of central banks and of government control over money. It's a distinct thing to say that there won't be financial intermediaries at all. From my understanding, I think there would still be a need for credit, as an example. So it's not that Bitcoin will destroy all the banks. It's more that Bitcoin will destroy central banking, particularly, and government control over money, the ability to inflate. So, yeah. So I basically agree with them on some of these points where they're saying, well, look, you can't just automate all of these things away, because some of these things still require some level of human interaction with them and some level of discretion, some level of perhaps mutability as opposed to immutability, which is one of Bitcoin's best attributes, right? So the money itself will be immutable, but the way we interact with it might not be, depending on what other layers get built out into the future. So next comment. So kind of related to the points above, where they were basically saying, look, we're going to need intermediaries after all, because we need some level of discretion. So that's some of this stuff around securitization, supply chain monitoring. Again, I would agree with them. I think what's happening is we've had this influx of people who are out there trying to blockchain all the things, when really that's not the point, and that really is missing the point. We have a blockchain for one specific reason. It's to create a censorship-resistant sound money. That's Bitcoin. Everything else, it's kind of cargo cult science. So, I've basically answered most of this point here, where they're basically talking about how Bitcoin, they say, is a slow, energy, inefficient dinosaur that will never be able to process transactions as quickly. Again, as I've said, the important thing here is Bitcoin as high-powered sound money, right? Bitcoin may well become the settlement layer for the banks of the world in 10, 20, 30 years' time. It does not have to have very high transaction rate on the chain. What matters is that it is censorship resistant, and it does its one job really well, which is coming back to that Unix philosophy that I was talking about earlier. So some of these points here, I might actually agree with them. So they're saying, okay, today's coin mania is not unlike the railway mania at the dawn of the blah blah blah, at the dawn of the industrial revolution. Sure, it may well be that we're going through what's like a .com bubble right now, and that all of these other shit coins and altcoins and many of the ICOs are questionable investments or scams, and that they're all going to liquidate, and there will be some kind of altcoin reckoning. But from my point of view, Bitcoin is like the Amazon of the .com bubble, right? So while this whole space might crash down a bit, in the long run, Bitcoin is where the value is. And so it's like how there was Amazon in the .com bubble, which, along with all the other companies, they took a hit initially, but then Amazon continued to do really, really well over the next, 10, 15 years or so, because there was a lot more underlying value in that. And so too is Bitcoin. Bitcoin has a lot more underlying value. There's a real reason for this to exist. It's just that people right now, they don't understand the reason for that to exist, because they don't understand the problems with today's money. So in some ways, I would agree, blockchain's uses will be limited to specific, well-defined and complex applications. Well, in this case, it's more like it will be limited to sound money. The other use cases, they can probably be done by standard database technology or some other means that's not so, quote unquote, inefficient in the need for storage and so on and so forth. So essentially, I think Nouriel and Preston are committing an error in that they don't understand the problem of today's monetary system correctly, and so they don't see the value of Bitcoin. So I hope that's been useful for you guys. If you've got any questions, always happy to take any comments. And if you found it valuable, please give me a like or a thumbs up on the video, and also subscribe to the YouTube channel. Thanks guys. See you in the next one.